Hello, you guys. So today we're going to just be doing part two of May 2022's past paper. So we're just doing section A, but if you want me to solve section B, then comment down below. And if you want me to solve a specific past paper, then also comment down below so I can do so. So please like and subscribe so I can actually continue making these videos. So yeah, let us begin. So let's read this case, the case we have in hand. Les Légumes Content. So LLC is a cooperative of farmers that sell organic product or produce, sorry, produce. LLC starting capital is 5,000. Okay. It needs a bank loan to buy refrigerators for its store. The bank has requested cash flow forecast. The forecasted figures are shown in table 3. Here we have all of our figures. So state two features of a cooperative is our first question. So let us begin. Okay, so first I just want to explain to you guys what a cooperative is. I'm just gonna delete this. Yeah. So what a cooperative is. So a cooperative is actually like a business organization which is owned by its members, and these members that own it share the profit, so they split it basically. Cooperatives exist in many industries, but it's usually mainly like agriculture, farming, and in this case is actually farming, but this is actually what a cooperative is. So it has like partners who split profits. I just wanted to like review that with you guys. So basically, let me give you two features. And when they give you the action verb state, you just have to say it. You don't really have to like explain it or relate to the case, because state and define, you just have to like tell them exactly what they want, and that's like it. So basically, a cooperative is a business. I'm just gonna make this slightly larger. Organization that works on the principle of like sharing welfare. Basically, when surplus or loss is made, the partners who own the cooperative split it. Okay, that's for the first feature. Um, Basically, the second feature is that the owners of the cooperative have limited liability, um, meaning that they are a separate entity from the business organization. Okay, so basically that's it. If the cooperative goes bankrupt, the owners will only lose what they have invested in it. So here we talked about the first one is that basically they just like the partners end up splitting whatever they make, whether it's a loss or a surplus, because again, yeah. And then the owners have limited liability. This is very extremely important, you guys. Limited liability is when the owners of the business and the business itself are not considered one. A case where there is unlimited liability is sole traders, but in this case, cooperatives, they actually do have limited liabilities. So now in the second question, okay, this is kind of bothering me, so I'm just gonna put it here. Here. It's not even the same color. Okay, so now in the second question, okay, this is kind of bothering me, so I'm just gonna put it here. Here. It's not even the same color. Okay, so now in the second question, okay, this is kind of bothering me, so I'm just gonna put it here. Here. It's not even the same color. Okay, so now in the second question, okay, this is kind of bothering me, so I'm just gonna put it here. Here. It's not even the same color. Okay. So for the second question, they say using table 3 and the information provided above, prepare a monthly cash flow forecast for LLC for the first 4 months of operation. Okay, guys. So we have to. Okay, so this is gonna be a quite long lesson because I wanna like draw it in front of you guys, and I want to explain every single detail for you guys so you can really get it, right? So first, we just begin by like drawing a really large box. So I'm just gonna try to make this as neat as possible. And if you're, well, of course, you're gonna be doing it on paper during your exam. I had cash flow for my mock. It did not come in my actual exams, but I always did manage to ace the cash flows. Cash flows are actually my favorite tool in IB business management. It's actually technically not a tool for my HL people, but it's like a financial tool that you have to solve. So for me, it was one of my favorites. And I really ace these. I always ace these. So now we have 4 months, right? They want for the first 4 months of LLC. So we're gonna split it into 4 months. So I know this is gonna take long, but I'm just gonna count the squares. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Okay, so we're just gonna give each one 5. So here we're just gonna give each one approximately 5. Oh no, they're not 4. We have to go put 5 and we have 4 months. So we're just gonna like give one each 3. I think 3 is gonna be like fair and reasonable, I guess. So these are actually 5, so I guess I can like space them out just a bit more. Let's do this, for example. Let's make this long. I think this is perfect. So then you just write here like month, then you do month 1, month 2, month 3, month 4, okay? And then let's think here. You can just write, you don't write it in your paper during the exam, but I'm just like trying to explain to you guys. So you have two things for cash flow. You have your inflows and your outflows. And of course you have other stuff that I'm gonna be writing throughout solving, but yeah, so let's look at these. So here, out of these, like, is these 3, I guess, they're gonna help us with calculations. So these are all for calculations. And here we have cash and credit sales. So we're gonna put them another color. So these are another color. And then we have rent, labor cost, cost of goods sold, overhead costs. So these are all outflows. Perfect. Okay. So now you see we directly splitted everything up really, really easily. So these are all outflows. These are our inflows. And these are just like for calculation purposes. Okay. So here I'm gonna like make these in a different color. Sorry guys, I know I'm annoying, but I'm just gonna like go with it like that. So inflows. Okay, so this was inflows. They're basically cash going into the business. Okay, and in this case we have cash sales and credit sales. Okay, so I'm going to start explaining what they are. Cash sales are basically sales that are paid in cash. Credit are basically sales that are paid 1 month later. In this case they're 50%, 50%, and they're basically payable 1 month later, they told us. And then you have, I'm hoping it's called that, outflows. Basically they're revenue expenditures, like daily expenses that the business has to pay, so the money that goes out. So this is out, so outflow, and then this is inflow. So one goes in, one goes out of the business. And yeah, so now we have to begin by actually doing or writing. I'm gonna make my handwriting thinner here. Opening balance. This is basically the money that the business starts off with, right? So okay, give me a second guys so I can make these all together. Okay, so opening balance is what the business starts off with. And in this case, the opening balance is 5,000. They gave it to us. So we have 5, and it's always better to actually write them each in a square. 5,000, right? And after that, after like the opening balance, we have cash inflows. So now let's begin with our inflows, right? So after cash, for inflows, I told you we have cash sales and credit sales. You see how I made it much easier on me? Cash sales. And always remember to write it exactly like the case. Okay, so you can't memorize the format from the book and just use it. You have to apply the case. So again, it's not only about it is about the content, of course, but it's also about the context. So here, after you put the cash and credit sales, you do total inflows because you're done with inflows. Okay, so this is it, and then you proceed by doing outflows. Okay, so we do outflows. I'm just gonna make this go up just a bit. Now, in your exam, you don't have to be a complete neat freak, but of course, you have to make sure it's good, especially if this is during the official exams, because your examiner needs to be able to understand everything you're doing. Rent. Then after rent, you have labor costs. This is gonna make it much, much easier, guys, trust me. Labor costs. After labor costs, you have cost of goods sold. Costs of goods sold, and after that you have overhead costs. I'm sorry this is taking too much time, guys. You can put it on times 2. And then after overhead costs, you have total outflows. Then you have net cash flow. And then you have the closing balance. So I probably did made this too big, but it's fine. Okay, then you can just erase all of those parts. Oh. Guys, this is annoying, but anyways. That's it, guys. Okay, so let us begin. So cash inflows. So the beginning, you don't really write anything. So first, we need our cash inflows for month 1. So we're going to begin with month 1. It's the best way to do so. So first, you have month 1. So for month 1, yeah, so for month 1, they say 50% of, okay, but then we have so how do we calculate the cash sales? So we calculate the cash sales by actually just looking at January, which is month 1, and then February, month 2, March, April, so March, April, right? Okay. So here for February, we just do easily sales. So we just do sales, and then we just do like equals price times quantity equals, okay, so we have 3,000 times 4, which is 12,000. So this is like our sales. But remember that half goes for cash, half goes for credit. So what we end up doing is that we end up writing 6,000 here, 0 here, and then we write 6,000 here. Deal? This is how it goes, because half goes cash, 50% cash, 50% credit 1 month later. Deal? Then total inflows, it's 6,000. Okay? So these are like our inflows. Our outflows, we have rent. So it's 4,500 per month. Right? So at this point, since it's but always remember the trend, sometimes they really change it and they're always like, in this month it's this much, or like it's in 1 month or whatever, so make sure that you read rent properly. But in this case, only this case, guys, you can write 4,500 for all boxes because it really doesn't change per all boxes. Okay, so here you can actually like just cross out rent because you did it. And then labor cost is actually the same thing because it's like this for each month. So 2,500 for each month for labor cost. So here just like save yourself some time. So here you can also cross it out. But for example, cost of goods sold is quite different because it's 40% of the sales revenue of that month, right? So we need to do 40% of 12,000. So we do 12,000 times 0.4, and we're just gonna do it in the calculator because I really don't know how to calculate that in my head. So we get 4,800. So we write it all. So this is something that confuses you, and it actually confused me when I was a student. Is that right? Because some students might think that let's do this in like green. Some students, this is a common mistake. Some students might think that the cost of goods sold should be 6,000 times 0.4, right? So some students think that. Okay, and they'd go ahead and they'd write 2,400. Okay. But this is actually wrong. Okay, this is not. Okay, actually, I should do this in red because green makes it look like it's right. So yeah, so this is actually wrong. You should not be doing that. Okay, this is wrong. So it's actually supposed to be the whole sales, which is 12,000. Okay, because what happened is that yes, their cash sales were 6,000, but their sales were 12,000. Hence, the cost of goods sold were actually worth the 12,000. So the 3,000 kilograms, they paid the cost for 3,000 kilograms. Okay, 3,000, yeah. So they paid the cost for 3,000 kilograms. They paid for the like things that manufactured the organic produce. Okay, so this is why it's 4,800 because they're just gonna get paid the 6,000 1 month later. But that doesn't mean that LLC didn't pay for the cost of goods. Okay, so then you have your overhead costs. So our overhead costs are 1,100 per month, and these like do not change, so we can write it all. So always make sure of that. 1,100, 80,100. Okay, and then you have total outflow. So we can only do this for 4 month once. So 4,500, 2,500, 4,800 plus 1,100. So here we get 12,000. Okay, made a mistake. 12,900. So net cash flow. Okay, so here keep in mind, I'm just gonna write this in red for net cash flow, inflow minus outflow, or cash inflow minus cash outflow. That's better, but yeah. So here you're going to get negative 6,900, and everything negative, guys, always write it in parentheses in IB Business Management. Always remember that. So our closing balance is going to be 1,900. Okay, so this is how you do it. So our opening balance here is also going to be 1,900, negative 1,900. Keep that in mind. So now for our cash sales, that's for Jan. Okay, sales, Feb, March, April is P times Q, 4,000 times 4, which in this case is 16,000. Okay. So here we have 8,000, and here we have 8,000. Okay. And you can also continue, but I don't want to confuse you guys, so we're going to do that later. But for the outflow, so for the total inflows, 8,000 plus 6,000, that leads us to 14,000. Okay. And now for cost of goods sold, we need to do 16,000 times 0.4%. Okay, so like basically 0.4, which is 40%. So it's 6,400 for our cost of goods sold. Oh, sorry, I wrote it somewhere wrong. 6,400 for our cost of goods sold. Got it? So here we have to calculate our outflows. So 4,500 plus 2,500 plus 6,400 plus 1,100 our outflows are 14,500. So 14,500. So we need to get our net cash flow, which is 500, because we're subtracting 4,000 by 4,500, so it's negative 500. Okay, and now our closing balance is negative 2,400. So got me to negative 2,400. So now we need to make our calculation. So here our sales is the same in all month 2, month 3, month 4. So here we have 8,000. So here we have 16,000. And then we need to see our overhead costs is the same thing. We could do 16,000 times 0.4, so it's 6,400. So our like outflows are the same. It's 14,500 if you just calculate them. And then our net cash flow would be positive because 16,000 minus 14,500, that's actually 1,500, so it's positive. So 1 second, 1,500. So 1,500 minus 2,400, that is negative 900. So we can see that our closing balance increased from negative 2,400 to 900. And then in the end, we do negative 900 for our closing balance, or for our opening balance. We have 8,000 here and 8,000 here. Because again, we have the same sales in month 3 and month 4 because of month 2. So then it's 16,000. So it's also 6,400 here because again, it's 0.4 times 16 is 6,400. So we have 14,500. We have 1,500, which is our like net cash flow, because it's 16,000 minus 1,500 is by 16,000 minus 14,500 is 1,500. So we have 900 plus 1,500, we have 600. So 600, which is positive. Okay, so this is it. So I hope you understood. I'm trying to make sure you guys understood. So always keep in mind that net cash flow is basically net cash flow, inflow minus outflow. But here just add cash, add cash. The words cash are better. Closing balance is basically opening balance plus net cash flow. Okay, so just like keep that in mind, keep these calculations in mind, and that's it, really. And for the sales, I just want to explain to make things very clear. So here we explain that the credit sales are 0 and the cost of goods sold are 4,800 just because they have already bought the material. And then we explain that here 6,000 is credit because 6,000 is from this month. Okay, so it's from month 1. The supermarkets pay a month later, or the customer story. And here, because it's 16,000, it becomes 8,000 because we divide them by 2, and so here. Okay, this is really it. So now let's go for our last question. This was, I feel like this was quite faster than like other past papers. But anyways, we're gonna go back to our original color. So anyways, we're going to be doing the last question, which is C. It says, calculate LSE's forecasted net profit at the end of April. So April is month 4, technically, okay. Okay. Month 4. So basically how you calculate net profit after a cash flow is you just do closing balance in month 4, which is our last month, because you have to do it in the last month. Month 4 plus credit sales. Sorry, I'm just gonna like month 4. And then, oh, sorry. So closing balance in month 4. Then you subtract opening balance in month 1 plus credit sales. Okay, guys, you have to just give me a second. Plus credit sales. So in this case, closing balance, we know our closing balance is 600, because we have it right here. And then you have our opening balance in month one. They actually gave it to us here, and we can see it here as well. But it's minus 500 plus the credit sales we had, which is 8,000, because these are our credit sales right here, plus 8,000. So we get 100. Sorry, I skipped a zero. 5,000 opening balance. So we get 600 plus 3,000, so it's 3,600. So basically that's it. So just keep in mind, if you want to have it in just easier words for you guys, in month 4, last month, month 1, first month, and then credit sales in last month. So this is really it. There are other ways which you can do it, but personally, this is how I like to do it. I think it's faster for students. So basically, this is it, guys. This was a really nice exercise. I really liked it. I think this cash flow was quite easy. There's one that was given, I think, in November 2020, which was quite difficult. If you want, we can solve that. If you want more cash flow questions, comment down below. If you want my notes, you can access my Google Classroom. The link is down below. It has mark schemes, questions for certain chapters. So it's like they're divided by sections. You have my notes and you have my email. Thank you so much, guys, for watching. I really hope you enjoyed my video. And bye bye, guys. Thank you so much.